What if I told you there's a financial formula that has ended every economic superpower in the last 400 years? Look around at modern-day America. The massive infrastructure, the unrivaled military might, the global influence that seems untouchable. And now, according to this formula, we're already past the point of no return. Economic dominance doesn't fade gradually into the sunset. It shatters, and the cracks are already forming beneath our feet. Here's what most people don't understand about the fall of empires. It's not war that kills them. It's not revolution. It's not even invasion from hostile forces. It's something far more predictable, far more mathematical. A financial death spiral that repeats throughout history with terrifying precision. Economists call it the fiscal dominance cycle, and it operates like clockwork. The pattern unfolds in four brutal phases. First comes resource overconsumption, where the empire spends far more than it produces, stretching itself thin across the globe. Then comes monetary manipulation, where the government desperately inflates away its problems, debasing the currency to buy time. Third is capital flight, where wealth and talent begin their exodus to safer shores. And finally, system shock, the rapid, cascading collapse that catches everyone by surprise, even though all the warning signs were flashing red. Here's what terrifies economists. These phases don't happen in isolation. Each one accelerates the next, creating a feedback loop that becomes impossible to escape. Let me prove it to you with 3 historical case studies that follow this exact blueprint. Take the Dutch Golden Age collapse. In 1650, Amsterdam was the financial capital of the world. The Dutch East India Company was the world's first megacorporation, worth more than Apple and Microsoft combined in today's money. The guilder was the reserve currency for international trade, and the Dutch controlled global shipping and finance. They were untouchable, or so they thought. Resource overconsumption hit first. The Dutch fought 4 separate wars with England between 1652 and 1784. Military spending exploded from 15% of their budget to 60%. They were maintaining colonies in Indonesia, the Caribbean, Africa, and the Americas simultaneously. By 1700, they were fighting England, France, and Spain all at once. The empire was hemorrhaging money. Then came the monetary manipulation. They started debasing their coinage in the 1680s, mixing cheaper metals into what was supposed to be pure silver and gold. They borrowed heavily from their own citizens through bonds. By 1715, their debt reached 250% of GDP, meaning they owed 2.5 times what their entire economy produced in a year. Interest payments alone consumed 40% of all tax revenue. They were trapped in a debt spiral with no way out. Capital flight followed inevitably. Banking expertise migrated to London in the 1720s and 40s. The best merchants relocated to England and America, where opportunities were growing. Manufacturing shifted to England, which had become cheaper and more innovative. By 1750, the Netherlands was importing goods they used to produce themselves, the ultimate sign of decline. The system shock came during the Fourth Anglo-Dutch War from 1780 to 1784. The economy collapsed during the conflict, and by 1795, when France finally invaded, they found an empire already dead. The financial capital of the world had shifted from Amsterdam to London, and it would never return. In just 80 years, Dutch per capita income went from 50% higher than Britain's to 30% lower. Total economic reversal. But surely that was centuries ago, you might say. Modern economies are different. Let me tell you about the British sterling crisis, which happened in living memory. In 1900, the pound sterling represented 60% of global reserve holdings. London controlled 80% of international lending. British government bonds were considered safer than gold itself. Their GDP was $226 billion, 40% of the entire Western world economy. They were the unquestioned financial superpower. Then came 2 world wars. World War I cost them £35 billion. DS, equivalent to $9.5 trillion today. World War II cost £120 billion, $32 trillion in modern terms. They were defending territories on 6 continents simultaneously. By 1945, military spending consumed 53% of their entire GDP. The empire was financially broken. Monetary manipulation became desperate. Britain left the gold standard in 1931, and the pound dropped 25% overnight. They returned to gold in 1946, but at a weakened rate. Throughout the 1950s and 70s, they printed heavily to fund their expanding welfare state. Inflation averaged 15% through the 70s. Your savings lost half their value every 5 years. Capital flight accelerated. Between 1947 and 1970, Britain lost 90% of their empire territories. Foreign investment fled London for New York. Scientists, engineers, and entrepreneurs migrated to the United States. And then came the ultimate humiliation. In 1976, the United Kingdom was forced to request an IMF bailout. The system shock hit that same year with the sterling crisis. The pound crashed 30% in just 8 months. They required the largest IMF loan in history at that time and had to raise interest rates to 15%, devastating the economy. Global reserve currency status ended. In 1914, 60% of the world's reserves were held in sterling. By 1976, it was 10%. Today, it's 4.5%. £1 in 1900 bought you $4.86. Today, it buys $1.24, a 74% decline. Reserve currency status vanished in a single generation. Still not convinced? Let me tell you about the Soviet collapse, because this one reveals something terrifying: the speed at which superpowers can disintegrate. In 1985, the Soviet Union was the second largest economy in the world. They possessed over 40,000 nuclear warheads. They had military forces deployed in 36 countries. Every Western analyst assumed they would last for decades more. They were wrong. Resource overconsumption was hidden but massive. Real military spending was 25% of GDP, numbers buried deep in classified budgets. The Afghanistan war was costing them $15 to $25 billion annually. They were propping up 12 communist regimes globally. Meanwhile, the United States was spending only 6% of GDP on their military. The Soviets couldn't sustain the competition. Monetary manipulation was baked into the system. The ruble was never convertible internationally. Nobody outside the Soviet bloc wanted it. They printed rubles frantically to cover deficits throughout the 80s. By 1989, official inflation hit 19%, but the real rate was over 200%. Soviet citizens were hoarding dollars, gold, anything except rubles. Capital flight became a stampede. Between 1989 and 1991, intellectuals and scientists fled to the West. Even Communist Party elites were secretly converting rubles to dollars and hiding wealth abroad. Gold reserves were sold off desperately. By 1991, their foreign currency reserves were nearly depleted. And then came the system shock at a speed that shocked the world. November 9, 1989, the Berlin Wall falls. 1990, oil prices crash and Soviet revenues collapse. August 1991, a failed coup attempt. December 25, 1991, the Soviet Union officially dissolves. Total time from crisis to non-existence: 900 days. Not decades, not even years. 900 days. The numbers tell the story. Soviet GDP in 1985 was $2.2 trillion. By 1991, Russian GDP had collapsed to $900 billion, a 60% crash. By 1998, it dropped further to $270 billion, another 70% collapse. The lesson is clear: superpower collapse happens in years, not decades. Now let me show you where America stands today, and I want you to judge for yourself whether the parallels are uncomfortable or terrifying. Phase 1, resource overconsumption, is fully active. The U.S. maintains over 750 military bases with 173,000 troops in 178 countries. The 2025 defense budget is $886 billion, 37% of global military spending, covering NATO's 31 nations plus Japan, South Korea, the Philippines, Australia, Israel, and unofficially Taiwan. Aid to Ukraine totals $113 billion, Israel $12.5 billion since October 2023. Including VA benefits, nuclear programs, and intelligence, costs exceed $1.4 trillion. Overextension is simple math. We cannot defend Taiwan, Europe, and the Middle East simultaneously. War games show Taiwan lost 80% of the time. Troop, ship, and pilot shortages, plus global flashpoints, confirm math doesn't work. Phase 2, monetary manipulation, is in an advanced stage. National debt in February 2025 is $36.2 trillion, a debt-to-GDP ratio of 122.3%, surpassing the World War II peak of 119%. The money supply rose 450% since 2000, 42% since 2020. The Fed's balance sheet is $7.4 trillion, up from $900 billion in 2008. The dollar lost 97% of its purchasing power since 1971. Inflation averaged 5.2% from 2021 to 2024. The Chapwood Index shows 8 to 12%. Housing is up 47%, stocks 65%. The 2025 deficit is $1.9 trillion. Interest payments total $1.1 trillion, exceeding defense spending. Phase 3, capital flight, is early but accelerating. Manufacturing was 16% of GDP in 2000, now 10.3%, with 5 million jobs lost. In 2024, 137 factories closed or relocated. The trade deficit hit $1.2 trillion in goods. We import 73% of pharmaceutical ingredients, 90% of rare earths, and 80% of electronics, meaning we cannot build military equipment without Chinese parts. Brain drain is rising. 6,705 Americans renounced citizenship in 2024, up 36%. Skilled workers return to India and China. Silicon Valley engineers move to Dubai and Singapore. Wealthy Americans relocate abroad, buy foreign real estate, increase gold purchases 220%, and 50 million own cryptocurrency. Phase 4, system shock, hasn't hit yet, but conditions are forming. Currency alternatives are emerging. BRICS, 45% of the global population, build payment systems bypassing the dollar. China and Saudi Arabia traded oil in yuan in 2024. The mBridge project links China, UAE, Thailand, and Saudi Arabia digitally. Dollar reserves fell from 73% in 2001 to 58% in 2024. Social fracturing nears civil war levels. Trust in government is 16%, media 11%. Cities decline. Triggers loom. Taiwan conflict, debt ceiling crisis, bank failures, Social Security insolvency 2031 to 2033, and dollar rejection as the primary oil currency, which could cause immediate collapse. Now, I know what you're thinking. You've heard the counterarguments. We have the strongest military. Yes, so did Britain in 1914 and the Soviet Union in 1985. Military power requires economic power to sustain it. You can't project force when you're bankrupt. The dollar is backed by the full faith of the U.S. government. The ruble was backed by the Soviet government. The pound was backed by the British Empire. Full faith means nothing when debt exceeds your ability to pay. We currently pay $1.1 trillion in interest to borrow $1.9 trillion more each year. That's not sustainable faith, that's a Ponzi scheme. Other countries have higher debt-to-GDP ratios. True, Japan sits at 264%, but 90% of Japanese debt is owed to Japanese citizens in yen. Our debt is largely owed to foreign holders in dollars that we print. When a reserve currency fails, the collapse is exponentially worse because the entire global system fractures. Technology makes us different. The Dutch had the best ships and navigation technology in the 1700s. Britain had the Industrial Revolution in the 1800s. Neither prevented economic collapse. Technology cannot overcome fiscal mathematics. We can just grow our way out. That would require 5 to 7% real GDP growth for a decade or more. Current growth is 2.5% and slowing. Meanwhile, debt is growing at 8% annually. The math doesn't work. The hole gets deeper, not shallower. So how fast could it happen? Look at history. The Dutch decline took 80 years from 1700 to 1780. The British decline took 60 years from 1914 to 1976. The Soviet collapse took 900 days from 1989 to 1991. Notice the pattern. Each collapse is faster than the last. Modern collapse would be even faster because of digital currency movement. Capital flees instantly now, not over months. Algorithmic trading means markets crash in minutes, not days. Global interconnection means contagion spreads instantly. Social media spreads panic faster than any previous era. Just-in-time supply chains have no buffers, leading to immediate breakdown. The realistic timeline. Optimistic scenario gives us 10 to 15 years of managed decline. Realistic scenario is 5 to 8 years to major crisis. Pessimistic scenario is 2 to 3 years to system shock. The most likely triggers ranked by probability. Debt crisis as interest payments become unsustainable at 40% probability. Geopolitical crisis requiring unsustainable spending in Taiwan or Ukraine at 30%. Dollar replacement in oil markets at 15%. Domestic political crisis or civil unrest at 10%. And major bank or financial system failure at 5%. Here's the brutal truth about solutions. Everything that could actually work requires short-term pain that politicians won't accept. Massive spending cuts of 30 to 40% of the federal budget, reducing military to 2 to 3% of GDP, restructuring entitlements, eliminating most federal departments, all political suicide. Tax increases to raise 2 to th. Trillion annually through VAT taxes and wealth taxes would trigger economic contraction and accelerate capital flight. A productivity revolution requiring 6 to 8% annual growth would take 10 to 15 years, and we don't have that time. Debt restructuring or controlled default would destroy dollar reserve status immediately. The public is unwilling to accept lower living standards voluntarily, and by the time there's political will to act, it will be too late. The pattern is clear. 3 empires, same formula. Overconsumption, debasement, capital flight, collapse. The Dutch in the 1700s, the British in the 1900s, the Soviets in the 1990s. Each thought they were exceptional. Each was wrong. America today has completed Phase 1. We're deep in Phase 2. We're in early Phase 3, and Phase 4 conditions are forming. The math doesn't lie. 36 trillion in debt growing 8% annually. 1.1 trillion in interest payments and rising. 1.9 trillion deficits during so-called good economic times. This is unsustainable, period. Every empire in history believed it was different. Every empire in history believed it would last forever. Every empire in history was wrong. The United States will not be exempt from economic gravity. The only question is, will we learn the lesson before collapse or after? History suggests we'll learn it the same way everyone else did, the hard way. The future isn't written, but history rhymes. And right now, it's rhyming very, very loudly.